Hi guys, it's been long since we ever talked. So today, welcome back to this episode, and we want to talk about challenges that face us in the market. And in this, we want to look at some of the mistakes we make, probably not intentional, sometimes intentional without knowing that this is a mistake we are going to make. And the first things first. So the first part is lack of a plan, lack of an investment plan, guys. Can you really invest without an investment plan? I think having a strategy in the market would make you design a very good investment plan, and this could go both ways, short term, long term, or even medium. It doesn't matter. Just have a strategy in the market when you want to invest. Secondly, focusing on your gains. Some individuals go for long-term gains. Can that really work? I think quick profits sometimes can be risky. You might think you're going to make a profit, and then in the long run it becomes a loss. So be very careful. I think we can strategize ourselves so that we make long-term profits. Could be small at a time, but it's more appealing and more profit more oriented. Many people will go in for a long term since it will give you small but for a long time, which could be more profitable. Another thing, the third one, ignoring diversification. Some people go in one investment opportunity without thinking about others. For the case of bonds, for the case of stocks, for the case of real estate, people go in with one investment plan, maybe just focusing on bonds. But what about if you have another alternative lucrative investment? So we need to think, where should we place our money, and should we place all our money into one thing? Just think about that so that you can diversify your money to diversify the risks. Next, number 4, emotions. We have already talked about this, but sometimes when you're going for investment, do not let emotions guide your investment plan, because this could lead you to failure. One, some people go in with fear, others go in with greed. They look at an investment plan and decide to put all their money into it, and others fear to put the money in the right investment, thinking they might lose it. So be regular and also be focused on your investment. Think about that and be investment oriented and look at your incomes also. 2, trying to time the market. Sometimes market, when you're investing, you can't time it, but you have to strategize for long-term profit. Even if the risks come, you will have a very good plan to diversify your risks. You will have the long term to protect your investment. But if you focus on short term, whereby you just go with time, one day you could think time is favorable, and then you find yourself, you placed your money at a very risk place and the money goes, you make a loss. So be consistent when investing. Sometimes research. Number 6, do your research. Do enough market research, because there is some investment opportunities where people just place the money because their friends have placed. What about you? Do you have enough information about that investment? So think about that, then do your research, invest with enough concrete information, knowing that this is from your own agenda and ideas. You're not thinking about this because of somebody. So if it's bonds, you're investing in bonds because you know how the bonds work. If it's stocks, you're placing your money in stocks because you know how you're going to make profit. If it's interest, you know how much interest you're going to get. If it's a profit or a benefit, or if it's a loss, you know you have done your own research. Sometimes we look at we overlook expenses. You want to invest, but you are not looking at the expenses in the long run. So you put your money without looking at how much do you spend on this investment. You're using 10,000, you're spending 10,000 in investment, but you're using 1,000 to spend 10,000, and then the profit you get 500. Does it make sense? So you find yourself spending more on expenditure than on returns. Is it making profit? No. Probably you are going to have a loss. So in the long run, is the expenses can it be taken or not? Because if you don't weigh your expenses with your investments, then the returns could be going to the expenses. So be very careful. Ignoring compound interest. Some people are investing on, let's say, money market funds. Some people want to eat profit, and let's say maybe you get some profit and you take the whole profit, whereby you would have left this small profit to pile up to give you more money, so that you keep getting a higher interest. So don't ignore the interest, the compounding interest. Let that money grow for a little bit, and then when you get enough profit, it could make you more money. But also be very careful when you are leaving your interest, so that when the market is changing, you can also be very observant and keen with the market. Next, we have lack of patience. Some people will invest into something because they want short-term incomes, and when the investment just starts growing, someone is withdrawing because they need this money for quick usage, yet the money has now started developing. So just pay attention and give it some time. At least develop a goal and a period. At what time do you need to use this money? Don't use money that is quickly needed or urgently needed. Use money that you think could be invested to give you a return. Next, we have an exit strategy. So some people would invest their money, and then later on, when they want now to close their investment, they have not thought of where to place the returns. What happens? The money comes, it is spent, and is finished. Again, have you made any wealth? No. Have you used the money for the right interest? No. You've ended up with nothing, from something to nothing. So let's pay close attention with the market, so that we don't have to put ourselves into such mistakes, guys. So see you in the next video for the next thing. I will let you know what we will be making, so that, guys, we have to develop each other. See you next time.